Mortgage rates eased just a little after Fed Chair Jerome Powell testified before Congress this week in two congressional hearings, one before the House Financial Services Committee on Wednesday and before the Senate Committee on Banking, Housing, and Urban Affairs on Thursday. In this video, we'll break down some of his comments and we'll also look at what is the real threat to the average consumer. Is it high interest rates or high inflation? After watching Chair Powell's testimony this week, I do have to say I have a little more respect for the man. Both hearings were dominated less by talk about monetary policy and more about political issues and agendas. And just like the US economy, Chair Powell remained resilient in not commenting on political issues. Patrick McHenry, the chairman of the House Financial Services Committee, said it best. He said, "It is highly inappropriate for lawmakers to attempt to influence monetary policy. Chairman Powell, I have faith that you will not allow politics to cloud your judgment in the fight to tackle inflation." Chair Powell did indicate that interest rate cuts are likely this year, but as he is known to religiously reiterate, not until the Fed gains more confidence that inflation is coming down to its 2% objective. This is what he said at the Senate hearing. If what we expect and what we're seeing is continued strong growth, strong labor market, and continuing progress in bringing inflation down, if that happens, if the economy evolves over that path, then we do think that the process of carefully removing the restrictive stance of policy can and will begin over the course of this year. So as you can see, he's very careful and strategic in every word that's said, and rightly so, because the markets are hanging on to every word, trying to read between the lines and predict what's going to happen. If the Fed over tightens for too long, it is a problem for the economy. But if it underestimates lingering price and labor market pressures and lets off too early, then inflation may resurge. So which is the lesser of two evils? Is it high interest rates or high inflation? Now, there was a lot of talk at both hearings about affordable housing and how the high interest rates were affecting housing costs. But frankly, housing services are only one piece of the puzzle. Goods and non-housing services make up a major portion of the PCE inflation numbers. When prices for everything goes up, the average consumer suffers. So pricing is a function of supply and demand. And when it comes to housing, there is a big housing shortage. And even when rates normalize, the underlying shortage will cause upward pressure on housing prices. Now, this chart by Altos Research shows that the national home inventory, represented by the green line, is way below pre-2020 numbers. In addition, the median home price has continued to go up year over year, and even after the Fed began its rate hikes, that number has stayed strong. Now add to this the complexity of the labor market, and you can see that it's a really delicate situation. According to the Bureau of Labor Statistics report from this morning, total non-farm payroll employment rose by 275,000 in February, and the unemployment rate rose by 0.2% to 3.9%. As Chair Powell said on Wednesday, the labor market is still relatively tight, but you can see that it's starting to soften, and supply and demand conditions are continuing to get into a better balance. So unfortunately, the Fed's dual mandate of price stability and maximum employment is kind of like trying to hit two birds with one stone. And it's really hard to get that perfect balance. Having said that, the markets have responded favorably to this week's developments, and we're seeing mortgage rates on average ease a little. And according to the CME Fed Watch tool, it is still most likely that the first Fed rate cut will come in the June Fed meeting. So let me know what you think in the comments below. Is excessive inflation a bigger threat to your standard of living, or is it the high interest rates? If you have questions about this or anything mortgage or real estate related, reach out to me. Also, like this video and subscribe to this channel to be notified of other educational content. Also, share this video with someone you think that may benefit from this data. Thanks for watching. Have a great day.